Hello friends. Today we'll be looking at PayPal Holdings Incorporated, ticker symbol PYPL, and I'll share my thoughts about the stock's valuation after the continuing price drop in the last few days, and also my plans to invest in the stock. PayPal is a global leader in the digital payment processing industry and connects merchants with customers by allowing customers to pay for purchases on a secure platform, just like they would pay using a credit or debit card. PayPal owns several other brands, and Venmo and Zoom are the more notable ones. Now let's look at the key metrics from PayPal's 2021 Q3 earnings, which were reported earlier this month. As you can see here, the number of active accounts grew to 416 million users at an year-over growth rate of 15%. It is also good to note that the number of active users is steadily growing every quarter, supported by user growth across various brands like Venmo and Honey. Revenues for Q3 2021 came in at $6.18 billion, up 13% year over year. As you can see here, the growth rate has tapered off compared to the previous quarters, and this is likely one of the major reasons for the sell-off in the stock after the earnings were reported. However, in the chart on the right, we can see that the merchant services revenue, which is the bulk of PayPal's revenues, has actually grown at a much faster rate, around 25% this quarter, if we exclude revenues from eBay. For some more context, eBay and PayPal split into two different companies in 2015, and after a 5-year arrangement to continue using PayPal as the primary payment partner, eBay has now started moving on to using their own payment processing services. I don't think this is a big concern to PayPal's future revenue growth as long as PayPal continues to grow their customer base and enter into strategic partnerships with other companies. In fact, PayPal just announced that they are partnering with Amazon to allow customers to pay using Venmo starting in 2022 when making purchases on Amazon.com. I think this will be a huge growth catalyst for PayPal in the coming years and should more than offset the loss in revenues from eBay. PayPal also continued to report very strong free cash flow numbers, adding $1.28 billion in Q3, which was 21% of revenues. The company also has a very strong cash position, which is more than double their total debt. So they should have no problems in sustaining and growing effectively, even if there is an economic downturn over the next few years. PayPal also provided guidance for the full year of 2021, with revenues estimated around $25 billion and free cash flow of $5.2 billion. Now let's look at PayPal's stock chart to see how the markets reacted to the earnings announcement. As you can see here, the markets did not like the slowing revenue growth, and the stock crashed from $230 to about $200 after the earnings were announced. And the stock has continued to fall even more in the last few days and is currently trading at the $193 mark at the time of recording this video. To see if it is a good time now to buy the stock or not, let's now look at a few scenarios to estimate PayPal's future revenues and free cash flows. So here I have listed 3 scenarios where I have estimated PayPal's revenues and free cash flows for the next 5 years and then evaluated what the price of the stock could be in 2026. As you can see, in the first scenario, I have estimated a conservative 10% annual growth in revenues, 15% annual growth in scenario 2, and a 20% annual growth estimate in scenario 3. I have also estimated the free cash flow and the price to free cash flow multiple in all 3 scenarios. Based on this, if we buy the stock at the current price of $193, you can see that we will lose money under both scenario 1 and 2, and even in scenario 3, we can only make a small profit. Having said that, I'm actually bullish on the growth prospects of PayPal, especially with the partnership they announced with Amazon, and I'm very optimistic that the numbers in scenario 3 will play out, or we may even see better numbers in the coming years. The issue now lies in the current market capitalization, which stands at over $227 billion. This is the reason we can only expect a small gain even in scenario 3. So I don't think it is prudent to buy the stock at the current market price unless you are ready to buy the stock in small quantities and average in if the price falls further. Personally, I would like to buy the stock around the $150 range, but I do realize that there will most likely be a bounce back in the next few weeks, purely from a technical perspective. So I actually plan to sell a put option around the $170 mark, where the stock has found support several times in the past. I'll be selling the $170 put option expiring in February 2022, which will give me a premium of around $535 for an annualized return of over 13% with a downside protection of around 12%. I encourage you to explore different option strike prices and expiry days and find one that suits your risk-reward criteria. If you are new to options trading or would like to bounce ideas, please let me know your questions in the comment section. That's everything for today, and I hope you liked this video and got some value from it. I would really appreciate if you can leave a like and subscribe to my channel, as it will encourage me to make more such videos in the future. And as a friendly reminder, I'm not a licensed investment advisor, so always remember to do your own due diligence before making any investment decisions. Have a great day, and I'll see you in the next video.